Welcome everyone to Master Your Accounting, our webinar here today for QuickBooks Online. My name is Alana Millis and I'm here today in Dallas, Texas, and I'm looking forward to helping you out with reconciling your accounts and running reports in QuickBooks. So the first thing we're going to look at is reconciling accounts. So which accounts should be reconciled and how often should you reconcile your accounts? And what is reconciliation and why should you even do it in the first place? Then we'll talk about managing users. So I'll answer questions like, how can you let your accountant see your company file? Or how can multiple employees work in the same company file? Or can you limit what users can see? The next thing we'll discuss is what closing your books means. And then we'll go through the process of how to actually do that. And then finally, we'll move on to talk about all the different types of reports that are available in QuickBooks, and more importantly, how to best utilize the reporting function by actually customizing those reports. And of course, my colleagues are here to answer your questions. So if you've got them, send them over at any time throughout the presentation today. Okay, so we've got a map and we know our destination. So let's get started. I'm going to go ahead and put myself on screen here so that you can make sure I don't switch myself out with some kind of accounting robot or webinar robot, right? I'll be on screen for you to see the whole time. But we're ready to go ahead and get started. So we're going to head over to our QuickBooks Online company. And today we are Craig's Design and Landscaping Services, and we are talking about reconciliation. Reconciliation is the process, for those of you that don't know, of matching your bank statement to your records in QuickBooks. And that's to make sure that everything is up to date and accurate. And really, this process should be done once a month, mostly to make sure your records don't get behind and any mistakes can be fixed promptly, right? But one thing that many people who use QuickBooks Online do is sign up for online banking, because it's one of the super awesome features of QuickBooks Online. And you can download transactions directly from your bank or credit card company and then add them to QuickBooks that way. And so what that means is that reconciliation is way easier because the transactions came directly from your bank. So to actually show you how easy that is, we need to add some of the transactions that we downloaded from our bank in this file. So I'm going to go to the Banking Center by clicking on the Banking tab over here in the nav bar. Looks like we've got a new Receipts button. I haven't explored that. Maybe it'll be a cool feature. Okay, and back in our Banking Center, we like to think of this as a waiting room because it's where transactions go to wait on your directions about where they're supposed to go in your books. So while they're here, they're not really affecting anything. And any of the transactions that are here aren't going to show up on any profit and loss reports or on any sales reports or anything like that because they haven't been told where to go yet. And that's why before we reconcile anything, we need to make sure these transactions get into our QuickBooks account. So that's an important first step, making sure that all the transactions that you might see on your bank statement have already been entered into QuickBooks. Now, when we do our reconciliation, we're going to be reconciling for the period of May, okay, the previous month. So that's going to be any transactions since our last reconciliation up to May 31st, okay? So that means that any transactions that occur after that date won't be a part of this reconciliation. So as we're adding and matching transactions in the Banking Center, we want to make sure that we're paying attention to any transactions that took place before May 31st. And if we wanted to, we could still add transactions that came after, and it would be a little extra work done before next time, but that's really all it would affect. So we always reconcile our accounts one account at a time. So right now, I need to choose the account that we're going to be reconciling. So in this case, I'm going to choose our checking account. And in this checking account box, we see three numbers, okay? And they mean different things. This orange number here means that we have 25 transactions waiting for us to make a decision about. And the other two numbers are very closely tied to our reconciliation. The bank balance here is our latest balance according to our bank. So if we checked with our bank, this is likely the balance that they would tell us that we have. The in QuickBooks balance here, this tells us what QuickBooks thinks our balance is based on what transactions have actually been entered. And a lot of people worry when they see that these two numbers are different, And while it's entirely reasonable to assume that they should match, there's no reason to worry. When the two numbers are different, it just tells us that there are transactions that QuickBooks knows about that the bank doesn't yet, or that there are transactions that the bank knows about that QuickBooks doesn't. So if you've handwritten any checks that haven't hit the bank yet, but you have entered them in QuickBooks, that's one reason that could be a difference. And if there's any transactions here in your waiting room, right, but that you haven't actually told QuickBooks about yet, that's also going to affect why those two numbers would be different, because essentially you haven't told QuickBooks about those transactions yet. And a lot of times, the more a business grows, the bigger the difference between these two numbers actually becomes. Now, again, we got to get moving because our transactions are getting a little impatient in the waiting room. They were ready to know what to do. And when we look down here, there are two main actions that we can take. So we take a look and we've got add and match. Okay, and you see this other option here for view. That's because QuickBooks is finding two different records to match, but that'll fix up once we match another transaction. Okay, and then you might see occasionally an option for transfer, but there's two main things you can do in this area, and it's adding and matching transactions. Okay, now there are transactions we can add and transactions we can match. So for each transaction that's been downloaded, QuickBooks searches through the transactions that have already been entered in QuickBooks to see if any of the downloaded transactions here in the waiting room match it. And if QuickBooks finds a transaction that seems like it's the same, you're going to have the option to match. Now, this is pretty nifty because it makes sure that your transactions aren't being entered twice. So, for example, if we scroll down here and look, we have this transaction for Pie's Cakes, okay? And this transaction was on May 29th, right, for $87.50. And QuickBooks looked through transactions that had already been entered. And when we click on it, we see that it found a transaction for the same date and the same amount. So if I click on this link, it's actually going to show me the transaction that was entered. But when I click match, it does exactly that. It's going to match this version of the transaction that you downloaded from the bank to the version of the transaction that you entered in QuickBooks, and it's going to match them together. Now, this feature is incredibly useful when we're dealing with deposits and checks. And that's because with checks, wait, this makes sense. Let's see. Yeah, it's incredibly useful when we're dealing with deposits and checks because when we enter checks in QuickBooks, give me just a second. I lost my place in my notes. I want to make sure I don't forget anything so that you can all stay focused here. Okay, so it's super useful for deposits and checks because with checks, we usually have to input those manually through the create menu so that we can actually keep track of check numbers. And so with deposits, we also often have multiple customer payments that are grouped together in one deposit. And what that means is that on your bank statement, it's going to show the lump sum amount, not the individual separate customer check. So we want to enter those manually as well because QuickBooks will let you link multiple customer payments together to create one deposit. But you don't want that deposit to count twice when QuickBooks downloads the deposit from your bank. So it's nice to know that you can enter the deposit manually, linked with all your individual customer payments, and then just match it to the transaction when it's downloaded later. And so if you want to know more about all of that, you should check out our class called Get Paid because it actually walks you through that process a little bit more in depth. So while matching is super easy, we've seen that we've got a whole bunch of transactions here that actually do need to be matched. And so one way to save even more time is to add a bunch of transactions at once. And generally speaking, you can trust that QuickBooks is matching transactions correctly, especially if you're seeing this green one record found label. So to do that, we're actually going to come up here where it says recognized 13, and we're going to click on that tab. Okay, and QuickBooks gives us a little note about that, lets us know where we can get help, okay? And so now we've got a list of all the transactions that QuickBooks recognizes, transactions that QuickBooks has found a match for and or that you've entered before, okay? So right now we've got 13 different transactions that we can actually add all at one time. Okay, so all I have to do is select all the transactions here by clicking this box. These are all matched transactions. And then I'm going to choose batch actions except selected. And what this does is it adds all 13 transactions at one time, which is super awesome because it's done super fast, right? So that saves us a lot of time because we're able to add almost half of our transactions at one time. Now we only have 11 left, but we do still have a few more transactions that we have to deal with before we can actually start our reconciliation. So we see this other option here for add. And now you notice that this one that said 2 records found only shows 1 record found, and that's a good thing. We'll be able to match that soon. And I can actually match that now. Okay, that's good. All right, so we've got these other options to add our things. And what this means is that these transactions are not already in QuickBooks, but we know that they happen because the bank sent them to QuickBooks to be added. So right now they're sorted by date. And remember, we only need to add transactions up to May 31st because those are the only transactions that are going to be involved in our reconciliation. So let's take a look at this transaction here with Hicks Hardware on May 13th. Okay, and when I click on this, I'm going to have the option to assign the payee, right? I could change it if it wasn't Hicks Hardware, but it is, so I'm going to leave that there. But I can also change the categorization that explains why I spent the money. So you're telling whether it should go to a specific expense account or asset account or something like that. And this transaction was for job materials, so I can start typing that in, and specifically for our decks and patios sub account for job materials. So we're going to select that here from the drop-down menu, and now I can click add. And this means that it's now part of our QuickBooks balance. And to prove it, I can go to this magnifying glass up here, and I can see in my recent transactions that the expense has been added right here. This is the expense that we just put in through the banking center. And it's just like any other expense in QuickBooks. I could click on it here, I could edit it, but usually you're not going to want to edit a transaction that you've downloaded from your bank or credit card company because we know that they're already correct. They already match what the bank says they're supposed to be. Now, we've still got some other people, some other little transactions in our waiting room that we need to deal with. Okay, so we've got Philip Masonry, which is another one. So we can click on that and add that to the job materials category as well. And click add. Okay, so that's ready to go. Now, even though this takes a little bit more time adding each of these transactions individually, it starts getting easier the longer that you use QuickBooks because QuickBooks uses this information when you're entering it to kind of learn about how you're spending money, and then it applies those same expense accounts later on when those same vendors appear later. So let's take a look at this Chin's gas expense. Now, it's a little different because it's showing as an expense from a gas station, and that's not going to be tied to just one expense account. I mean, think about all the different things you can get at a gas station. You can get phone chargers at a gas station. You can get the newest as seen on TV product, right? And of course, your Coke and your candy bar. And those are all going to be recorded to different expense accounts. So what I want to do is I want to click on this option here for split. So here I can actually choose in this category, I can choose my fuel category here. And I can say that $85 of that went to fuel. And then I can choose, say, my, let's see, something else that I might do at a gas station. Maybe my meals and entertainment expenses. And maybe $100 of that went to meals and entertainment. So now I can just click save and add. And what this does is it adds the transaction to QuickBooks, but it separates that expense out into those 2 different expense categories so that it shows up correctly on my profit and loss later. Okay, so that's really useful. So if you needed to include more accounts, you could always click add lines. And once you've got them all ready to go, you can just add it into QuickBooks. So now we can keep adding transactions, but sometimes, not often, but sometimes you know that you've already entered a transaction, but QuickBooks isn't identifying it as a match. Say this A rental, right? I could click find match, and what QuickBooks would do is find a bunch of transactions that it thinks matches with that option, and I could force the match that way. Okay, I can do that. I think it works with my, up here I've got a Books by Bessie transaction. Oh, it's showing me a whole bunch of different options. So you want to make sure that you choose the right one, but that would be one way to do it. So these are all things that QuickBooks thinks it can match to, but it's not really quite confident enough to identify it as having found a record. But once you click that transaction, click add, it's going to add it and match it just the way it did for the other ones. Now we've got Mahoney's Mugs here, which is a, we'll say a miscellaneous expense, and we'll click add that way. And we also have a transaction here from 6/3, and I know that this is after our reconciliation period, but I want to show you this thing about the banking center. So if I click on this A rental, I can add the payee to be A1 rental. So I can add my vendor directly from here, right? And I can say that it's a customer, or a vendor in this case. We'll say vendor and click save, and that automatically adds them here. And then I can create, as you see, automatically A1 is going to be, well, normally, if it shows up here, I can also have the option here to change the account that it's associated with, right? So I can say it's disposal fees, right? Or rental fees. We'll say equipment rental, I think, is an option here. Yeah, equipment rental. And when I add this, what it's going to do is it's going to associate that same thing with these two accounts. And if that's true, oh, here, we'll do it. I'll do it with a different one to show you that it actually works. We'll put it in here, A1 rental. Okay, so now you can see when I choose equipment rental, this label down here, up here, is going to change to equipment rental as well, this other transaction, okay? And it's because it's recognizing as the payee, so that becomes a recognized transaction. And if you don't want that to happen, you can click this create a rule from this transaction, and that will allow you to edit whether or not you want that setting to happen. So we don't need to add those right now, or we can add them anyways, get a little work done and out of the way for us. Now, if you add something that you don't want added, you can go over to review and you can click undo, and it'll hop right back over into this for review tab. If there's something that you don't want included, you can check it off and choose batch actions, exclude selected, and then it's going to show up in this excluded tab where you can check it off and delete it, or you could just undo it and it'll go back to the for review tab if you did it on accident. Now, we've got two more transactions here that are before May 31st. So we got to add that one. We got to choose which record here. It's spent money, so we want cash purchase, match. Okay, so it's matched that transaction, and we can leave this July 26th transaction in there. We don't need it because it's after our reconciliation date, and so we'll do that later. Okay, now let's move on. I think we're just about ready. We've added all our transactions that were downloaded from our bank, or we've matched them to transactions that we already entered. So now we are ready to begin our reconciliation. So I'm going to get really set up to be successful by printing out my bank or credit card statement so that I can compare the transactions in QuickBooks to what my bank sent me. So if you're super into saving trees, you can also open it in a new tab right here, right? And that's great. But I know a lot of you might be a little more comfortable staying in the same window while you're reconciling. So printing the statement off right here, I've got my statement, settling in with a pen or a highlighter is really going to help you make sure that you're keeping track and marking off all the transactions as I go, so I can keep track of everything that I've already looked at. Either way, you definitely want to have that statement readily available. So to actually start a reconciliation, I'm going to go to my accounting tab and I'm going to select Reconcile. You can also choose it if you come up here to the gear icon under Tools, you can choose Reconcile that way as well. And the very first time I'm going to get this screen that says Get Started, I get these fun little workflow that encourages me about how easy this process is going to be. And really, reconciling should be an easy process because you are awesome at bookkeeping and you've been putting everything in exactly the way you're supposed to. So I'm going to close these little tips here. for us. Okay, now in this reconciliation screen, we have to tell QuickBooks which account we're reconciling. Now, most of the time, these are going to be the accounts that you've connected through the banking center, but really, you can reconcile any account that you would find on the balance sheet. But the accounts that really matter that you have to reconcile are your bank and credit card accounts. And we always get people asking us, should I reconcile my PayPal account? Now, if PayPal sends you a statement, you should definitely reconcile it, because reconciliation is basically just a double check to make sure that your records are an accurate reflection of your financial operations. So if you think that PayPal should be correct and you have a statement that you can use to compare it, it never hurts to double check your work, right? So today we are going to be reconciling our checking account, as we mentioned earlier. So I'm going to select it from this menu here. And then we see the labels here for beginning balance, and ending date. Now your beginning balance is going to be on your statement, right, that you printed off because you are prepared, right? And that's going to be how much money that we had at the beginning of the statement period. So for most banks, a statement period is usually from the beginning to the end of the month, right? So from May 1st to May 31st, okay? But credit cards, they're a little more varied. So you're probably going to have to look at your statement to find your statement period on the balance that they sent you. So it's usually some kind of a date range. But for us today, we're reconciling for the month of May, and the beginning balance is how much money that we had in the bank on May 1st. And you'll notice on the screen that you can't actually change this number. Okay, so if you can't enter it anywhere, then where is QuickBooks getting it from, right? How is it just pulling it out of thin air? No. One place that it's getting it from might be that you entered an opening balance when you first created the account in QuickBooks, okay? But it might also come from the information that it automatically downloaded when you signed up for online banking, when you connected with the bank feed in the bank center, okay? Now, if it says 0, that means that you probably didn't enter a beginning balance for the account. So you should probably go back into your chart of accounts and actually set a beginning balance. But if you have been using QuickBooks Online for a little while, then this number is actually going to be coming from your most recent reconciliation. So let's take a little bit, just think about how that works. When you look at a bank statement, you see the period the statement is for, like May 1st to May 31st. Then you see a beginning balance and an ending balance, which is how much money you started with and how much money you had at the end of the reporting period. And that ending balance then becomes the beginning balance of the next period statement. So whatever our ending balance on our, what comes before May, April statement was, right, is going to be the beginning balance on our May statement. So for the ending balance here, I'm going to enter how much money my bank statement says from the bank that I had at the end of the statement period. So for us, that's $407.63. Okay. Now next month, this amount is going to be my beginning balance for the June period when I go to reconcile June. Okay. So now we're going to enter the ending date, which I can also get from my statement. For most bank accounts, again, it's going to be the last day of the month. So that's what I'm going to put in here. But for credit cards, it's going to be whatever your statement says, whatever it says the last day of that statement period was. Okay. So we're ready to go. We've got all our information. It's correct. It's ready to go. We're just going to click Start Reconciling. And what this is going to do is open up the reconciliation window. Now this screen can be just a little bit intimidating because it's got all these formulas and different things up here, and we actually don't need to look at those right now. We'll come back to them. So I'm just going to collapse the menu right here, and we'll be able to come back and look at that again later if we need to, right? And we will, so that I can show you exactly what it's for. Now the process that we're going to be using is that if we see a transaction on our bank statement and we find that transaction on our screen, then we're going to check it off on our paper. I'm going to check it off on my paper, and then I'm going to check it off on my screen. So I see a $175 deposit on my bank statement. I check it off on my bank statement, and then I come over to my screen and I check it off on my screen. And I'm going to go through the entire bank statement just like that. This check mark means that the transaction is in QuickBooks and it's on our bank statement. And we're just going to keep checking things off until we run out of transactions on our bank statement. And that's where the paper bank statement comes in super handy, because I'm going to be checking them off on my bank statement too, just to make sure that everything that's on my bank statement is in QuickBooks. Okay, so I see it in QuickBooks and I check it off. I check it off on my statement. Okay, now what am I going to do if there's a transaction that's on the bank statement, but it's not on this list? So it's on my paper, but I don't see it here. All you're going to do is go to the Create menu up here, and you're going to enter it in, because if it's on your bank statement, that means it happened and it needs to be in QuickBooks. So you're going to add it. And once you add it to QuickBooks, it's going to show up in this screen ready for you to reconcile. And so then you can check it off. Now, what are you going to do if you see a transaction that has the wrong amount? It doesn't match the transaction, the amount that you see on your bank statement. All you have to do then is you're going to click on the incorrect transaction, not that one. Let's see, this one. Click Edit. I want to edit. It's going very slow, I'm sorry. You're going to click Edit, and it's going to let you change the amount here. Okay. And some of different types of transactions do different things. Customer payments can be a little tricky, but usually you can edit them right in this window. But if you can't, you can just click Edit and it'll let you edit it that way. Okay, so that's what you do if it's in your bank statement but not in QuickBooks. It's what you do if the transaction is the wrong amount. Now, what do you do when you come to this window and you see, I'm going to show you here in a second, there's a bunch of transactions that are already checked off. Why is that happening? Well, this is actually a really good thing, because it does not mean that an elf snuck in and started doing your reconciliation without you, especially because elves make shoes and they occasionally do dental work, but they don't do bookkeeping. So what is happening is that the transactions are the same transactions that we added through the banking center. So for example, down here we see the Hicks hardware expense and the Pam sites expense. Both of those are things that we added directly from our banking center, okay? And this is where the banking center is another huge advantage. Any transactions that you add or match through the banking center are what are called pre-reconciled. So they're already marked because QuickBooks knows that these transactions came directly from your bank, so they're definitely going to match your bank statement. And that makes your life super easy, because if all your transactions have gone through the banking center, you're going to get to the reconciliation screen and discover that all the transactions have already been checked off, and you'll already have a difference of 0. And that's good, because in any reconciliation, that's your goal, to have a difference of 0. But we weren't necessarily as diligent as we could have been, so we still have a few more transactions to go through. And normally if you're using banking, you wouldn't have all these extra transactions, but this is a training file designed so that I can show you multiple different things. So normally, if you're using the banking center, most of the transactions are going to be checked off. You haven't added anything else that the bank doesn't send over. But I'm showing you how you would do it if the bank didn't send everything over. So I'm going to keep checking transactions off. I see them on my bank statement. I check them off on screen. I check them off on my bank statement. I just keep going until all the transactions that are on my bank statement are checked off in QuickBooks. Okay, now, each time I check off a transaction, we're going to see the difference changing up here, right? So if I click on a payment, it's going to change. If I click on a payment, it's changing here. That difference is constantly changing. Okay, so what is that, right? The difference it's referring to is the difference between what's in QuickBooks and what's on your bank statement. And that's the number that we want to be 0, because we want the QuickBooks statement and the bank statement numbers to be the same, and therefore have 0 difference between them. So let's go ahead and expand this back out and take a look at what's actually going on here. QuickBooks is starting with your beginning balance, $5,000 here. Okay, and it's subtracting the payment. So when I check off a payment, it's adding that to that number to subtract from the beginning number, and it's adding the deposits to it. Okay, so when we put those numbers together, we're going to get a cleared balance. Okay, and we want the cleared balance to be the same amount as the ending balance. Okay, we want there to be 0 difference between them. That's the whole goal of a reconciliation. Okay, we want the cleared balance to be the same, because the cleared balance is the in QuickBooks balance part, right? And the ending balance is what's on our statement. And again, I'm going to keep saying this because it's the big point of reconciliation. We want the bank statement and what's in QuickBooks to match perfectly, 0 difference. So that's what we're working on. So I'm going to keep checking off all the transactions that I see on my bank statement. So I just keep going. I see them on my bank statement. I check them off on the computer. Okay. Now I've got a way bigger difference than I was expecting. Did I check everything off? Let's make sure. Now this is what happens when you don't do your accounting correctly. You end up with transactions checked off that shouldn't be. Now, what are you supposed to do if you find a transaction that is in QuickBooks that's not on your bank statement? Don't check it off, right? You're gonna see some things take a little longer to go through your bank. Some things don't do what you expect them to do. The goal is to get QuickBooks records to match the bank records, not to get the bank records to match QuickBooks. Now, if there's an error, then you need to contact your bank. But if you check off transactions that aren't on your bank statement, the transaction's not actually going to work. Okay, so I've got a little problem here. I think I put my ending balance in incorrectly, because normally when I do this, I don't have zero difference. So what I'm gonna do is I'm gonna come up here to the edit info section. And what this does is allow me to adjust my ending balance. And in this case, I look at my statement, I realize, oh, wow, Alana, you're not smart. You have entered an ending balance that is totally incorrect. In this case, your ending balance should have been, I gotta do the math here, because this is not a real statement. 76141 768 41 4 10 15 16 7 11. Okay, your ending balance should have been 04. Save. Now I have a $0 difference. That's the balance that I put in here. This is what's actually on my statement. I don't know how I made such a ridiculous error, right? That's totally crazy. I shouldn't do that. Now, what are you gonna do if, say, the balance on my thing actually says 05? Okay, there's a 99-cent difference. And my balance, this is the correct balance. I checked it on my statement and I've put the right thing in here, but I've still got a 99-cent difference. Now I could come up here and I could click finish now and I could force QuickBooks to do it. The problem with this is that it's going to create an automatic journal entry that adjusts my balance. And that's not what we want to do, because that's basically just writing off that money and saying, oh, we don't know where it is and we don't care, right? That's not what we want. We want our things to match. We want QuickBooks to match our bank statement. So the best thing to do is click go back, and you're gonna go back and you're gonna look through the transactions and make sure that they're correct. In this case, I discovered that this transaction right here is supposed to say $19 exactly. Click yes. Oh no, that was the wrong one. I'm sorry. Okay. My bad. Go back. Now this is why you shouldn't edit things that the bank downloaded. Oh, we gotta check it off again. Check. Check. Oh no, that's the wrong one. It's supposed to be, I guess in this case, $20.98. Click yes. That transaction was incorrect. So I can edit the amount and now it's correct. Okay, so now I've got a $0 difference. It's very important that you go back through and you actually find those errors and you actually figure out what's happening with my business. So what I can do now, because I have a $0 difference, I can click this big finish now button and it gives me this, woohoo, you did it. And that makes me feel good about myself. So I click done. Now, the best thing about this is that my reconciliation is correct, and it means that QuickBooks knows that all of my entries for the period from May 1st to May 31st is correct according to the bank. So now I can have a lot of confidence that all of my reports will actually show me accurately what's happening with my business. So in the reconciliation screen, I can click history by account. And what this is going to do is QuickBooks is going to show me a report of each reconciliation that I've performed for my account. So you can see the changes that were made here if anyone deletes or edits reconciled transactions, but ideally we're going to avoid that. and the changes will usually say 0. And if you accepted a reconciliation, if you did that forced reconciliation that had a difference, you're going to see that auto adjustment amount here. So if we had accepted that $1.98 difference, I would see that auto adjustment $1.98 there in that column. Now, what do you do if you want to know if a transaction has already been reconciled? What if you need to make a change, but you want to make sure that you're not changing a reconciled transaction? How could you find out if the transaction had actually been reconciled? What are you going to do? Well, all you have to do is go over to the chart of accounts. You would choose accounting, chart of accounts. And so I'm going to click see my chart of accounts. And in my chart of accounts, I'm going to be able to view the register for my checking account. So I click view register, and what this does is allows me to see a list of all the transactions for that account. Okay, and so all I have to do is take a look at this little check mark column, right? And you see letters like C and R here, and the R means that the transaction is reconciled, and you can actually see that little extra information there. The transaction has already been reconciled. And so if it is reconciled, we usually don't want to change anything, okay? You probably shouldn't change it at all. Changing the account that's associated with it isn't going to be too big of a deal, but you don't want to change the amount on a reconciled transaction because it's going to throw off future reconciliations. Now, this window is also where you would go if you needed to unreconcile transaction, which it's possible, something you should be very careful of, but if you did need to do it, you could click where the R is, and you could click again, and it's going to erase that R. And what that means is it'll become unreconciled, no longer part of your reconciliation. Now, if you save this, it's going to mean that that transaction is not reconciled anymore, but you really shouldn't do that, and definitely you should talk to your accountant before you do something like that. So I'm going to click yes. And that C means that the transaction is cleared. So those are things that we downloaded from our blank. The C basically is that pre-reconciled transaction. So if you're keeping up with your transactions every month and you know all of your records are accurate reflections of your financial position, there's another action that you're going to want to do to make sure that everything stays that way. And that thing is closing your books, okay? Closing your books essentially puts certain entries that you've made in QuickBooks into a sort of vault, right? So it's not that you can't access them or that you can't see the transactions on reports, but it does make it so that those transactions can no longer be altered. So it's kind of like creating a final draft of your books. And this matters because the reason that you're keeping all of these records in QuickBooks, right, the reason you're putting it all in the computer is so that when you file your taxes, you'll have a reliable profit and loss statement and a reliable balance sheet so you can accurately report your income, expenses, and assets to the government. And you definitely want to make sure that those reports will always pull up the correct numbers, right? Especially if you're audited. Things could go south really quickly. If you're audited, you're going to run into some transactions if those reports start pulling up different numbers than what you turned in. So setting a closing date actually helps you make sure that those reports are safe from being changed over time. But it's also really useful for protecting your reconciliations. So if you wanted to, you could close your books every month after you did your reconciliation to preserve those records and make sure that everything stays accurate. So to set a closing date, all you're going to do is go up to the gear icon and you're going to choose account and settings. And this page often takes a little bit of time to load, so we'll give it some time. Give it a chance to load so I can show you where you're going to go. We're going to go down to the Advanced tab once it finishes loading. Reconciliation is so fun, isn't it? Okay, so now we can click Advanced, and right here in the accounting section, we see a place to close the books. And so when I click on that, I'm just going to check the box off, and now I'm going to pick a date. I'm going to pick any date that I want. You're literally just picking one day that you're going to set as the closing date. So that means that every transaction that was before that date is going to be closed, and it'll be much more difficult for it to be changed. Okay, so for most companies, it's going to be the end of the year, like December 31st, 2018. But if you were closing more often, say I was closing once a month, then it's probably going to be the last day of the month. So I'll put in May 31st, 2019. And then I have to decide if I want changes after viewing a warning or changes after viewing a warning and entering a password. Now, we really recommend that you enter a password because if you do have multiple users, you're going to want to make sure that only certain people have access to make those kinds of changes. So setting a password makes that just a little bit easier. So I can set a password here and click save. Okay, and what that means is that my closing date is set. Any transactions from before May 31st are going to be much more difficult to change. And an added bonus to this is that it makes it more difficult to add any new transactions before that date as well. So for example, if I come up to the create menu and choose check, and if I put in a payment date of, we'll wait on the check to load. If I put in a payment date of March 26th instead of June 26th, right? And let's say I'll choose my payee to be Lee Advertising. It's an advertising expense for $101. And I try to click, save and close. QuickBooks is going to give me a little warning. And now if I don't know the password, I was just completely prevented from being able to change it. I'm not allowed to do it. I'm not supposed to be able to do it. So I was just stopped. Now, if I'm the only one that knows the password, it does give me a little reminder here. I can put the password in if I want, but it gives me a little reminder to think twice before I actually enter that transaction because it's before the closing date. So closing dates are really useful for adding some extra security to previous transactions and making sure that everything stays authentic for your records. And that brings us to our next topic, multiple users. Now, the way you set up more than one person to use your QuickBooks file is to leave without saving, and then go to the gear icon and select Manage Users. And this screen is going to allow you to add either a new user or invite an accountant. And for inviting an accountant, you're going to click on this accounting firms option, and you can click the invite button. And you can have two accountants, up to two different accountants, and they can log into your company file at any time to add transactions, edit transactions, and do all of their accounting things. And this is a really great way for accountants to work with their clients because you can just log into the company, and when you log into your own account as an accountant, you'll be able to see a listing of all your clients and then be able to see the company file from there as well. But let's say you've got multiple employees that all need to be able to enter transactions. So to do that, all I have to do is click Add User, and then I have four options here. Okay, I've got standard user, company admin, reports only, and time tracking only. Now, reports only and time tracking only, there's no limit to the number of users that you can have. But for these other two types, standard user and company administrators, there is a limit, and the limit depends on your subscription level. So for Simple Start, you can only have yourself as a user. In Essentials, you can have yourself plus 2 other users, and in Plus, you can have yourself plus 4 other users, okay? Now, company administrators can basically do anything they want in the account, okay? And, okay, you can only have 1 account user. I thought you could have 2, but maybe not. Company admin can do basically anything they want. They can see bank records, they can see company information, they can run payroll, do all the things. But regular custom users, a standard user here, I'm going to click next because you can set a few different guidelines on what they can and can't do. So if I select next here, I can click that they have all access, or I can click limited, and then I can choose if I only want them to do these customers and sales things, or if I only want them to be able to do these vendors things, right? And so you can see the list of all these screens, and you can go through it to kind of basically figure out what it is that you want them to do. So far today, that's users. We reconciled our checking account, we've closed our books, and we've learned how to give our accountant access to our books and how to set up multiple users. But now we're going to spend just a few more minutes on reports. And the reason that we're talking about reports with reconciliation in this class is because when you reconcile, it means that your reports are more reliable. And having reliable reports is really important because aside from general bookkeeping and general record keeping, reports are the main reason to even use QuickBooks, right? Reports help you file your taxes, they help you analyze your business operations, and they generally help you just gain a deeper understanding of your business operations. Okay, so there are three main types of reports in QuickBooks Online, and the most basic type of report is the list report. And the list report simply lists out data that is in QuickBooks. There's no analysis or formulas or anything like that. It's just a list of information. So if I run the customer contact list, I'm going to see a list of all of my customers and their contact information, right? And in the report itself, I can click on any of the customers' names and it's going to pull up their account for me to see. Now, some list reports, we'll go back to the reports tab. Some list reports will give you transaction data. Like if you look at the invoice list report, you put in a date range and then it's going to show you all the transactions, all the invoices listed in that time period, but there's no analysis in this report. There's not even a total at the bottom, right? It's just telling you this invoice was for this amount and it was on this date, right? It's just information. And so you can use list reports to look up information really quickly, but that's about it. If you're wanting to gain insight about your business, you're going to want to run either a detail report or a summary report. Detail reports give you the same data that you get on a list report, but it adds analysis. So for example, we'll go back to reports and we'll take a look at the sales by customer detail report. Okay, and the name is very similar to what we just saw, right? Oh, sorry, no, it's not. We haven't looked at the summary report yet. This report, once you set the date range as usual, okay, it's going to show you each line of every transaction that you've had within that date range that matches the parameters of the report. So for this report, we're seeing every sales transaction from all dates, okay? And so these are things like invoices, credit memos, sales receipts, and it's breaking it down by every single line from those transactions. And this is where the analysis comes in. It's also broken down by all the sales for each customer. So we see all of the invoices and other transactions related to sales for Amy's Bird Sanctuary, and we see a total for that amount. We see Bill's Windsurf Shop and a total for that amount. Okay, now this is nice because you can always click on any of these transactions to kind of zoom in and it'll show you more information about it. It's really useful when you're searching for specific reports. So knowing the sales name here, we've got sales, we know it's a sales report. By customer, we know that it's going to be broken down by customer, and detail tells us that it's going to give details of every single transactions within that date range. Now, some of you are thinking, okay, that's pretty cool, I like that, but it seems like maybe it's more information than I could ever possibly want. Now, what am I supposed to do about that? Well, if you want an analysis report, but you want something a little bit shorter, you could instead, if we go back to the report list, run a sales by customer summary report. So I'll click sales by customer summary here. And this name is the one that is very similar to what we just looked at. It's the same report as the detail report, but as indicated, it is a summary of those sales instead of just the details, right? And so on this report, we see all the same information, but it's reduced, it's still down to a single number, 630. That's the same amount that we saw on the detail report, but we see that it's just the total. That's the sales for all dates for Amy's Bird Sanctuary for that specific customer. Now, if you're looking at this report and you're like, wow, I still need a little bit of more information, that's great. You can click on the number and it's going to bring up a detail report for just that customer. So that's pretty nice too. Basically, summary reports are the most common type of report in QuickBooks because they give you a lot of data with analysis really succinctly. Plus, you can customize any report to give you exactly the information that you're looking for. So if you look at the top of this screen, you're going to see this option for display columns by. And I can choose things like if I want to see all my sales for each customer broken out by month, I'm going to see that here. I get the sales in each month across the top. I still get my total on the far right. Plus at the bottom, I get a total for each month's sales. So this is a really useful report if I want to compare different months, right? It's very useful. Okay. Now, I also can choose any of these other options here. I'm going to go back to total only though, to show you this compare another period section. So I'll click Run Report, and then, what do I have to do? It's not letting me compare another period. Why? Oh, because I need to pick a specific period. So we'll say all the sales for this month, and I'll click Run Report. We don't have any sales for this month, so I'll click last month instead. Maybe we'll get some there, Run Report. Okay, all the sales for last month. Now, if I clicked Compare Another Period, I can click Compare Previous Period. I can show the dollar change and the percent change. And when I click Run Report, this report is going to show me the same previous period. So right now we chose last month. It's going to show me the month right before that month. So I can compare my sales from May of 2019 to my sales from April of 2019. So that's also pretty useful. If I didn't want to see the previous period, I could instead choose the previous year, which will show me, Run Report, the exact same time period from the previous year. So I have May of 2019 compared to May of 2018. You can see we weren't in business in 2018 because we don't have any sales for that period. But that means that the longer you use QuickBooks, the more data you're actually going to get, because you'll actually have data there to compare. So that's why your reports being correct is really, really useful, right? So I can also, if I wanted to compare a year to date, I can do that as well, compare the month to how I'm doing so far this year. So it's pretty useful. Now there's some other ways that we can change. If I come over here and click on the Customize tab, Customize, okay, you've got some normal settings here. If you want negative numbers shown in red, you want big numbers divided by 1,000, you want to use cash or accrual. Those are all great settings, but I can also choose this filter option, and this is the most powerful feature of reporting in QuickBooks. If I only want to see my sales from Amy's Bird Sanctuary, I can click Run Report, and now I'm only going to see my sales from last month for Amy's Bird Sanctuary. If I wanted to see instead all my sales for design broken out by each customer, I can see which customers are giving me the most income for design. And I can do that with all of those filter settings. It's super useful. Now, you're thinking, awesome, this is exactly what I want, but can I change the name of the report? The answer is yes, yes, you can. If you click on the name of the report, you can change it here. You can also email the report. If you come up here and click Save Customization, you can click Save. We'll call it Sales by Customer Summary. When I go back to my report list, click back to report list, and I click on Custom Reports. The computer is running slowly today. Then I can click Edit, and if I click Set Email Schedule, I have all these options here, and QuickBooks will automatically generate and email the report to whatever email addresses I put in here. So it's pretty useful. So we're getting near to the end of our time. We've progressed pretty far. We've talked about how you should reconcile your bank card and credit card accounts once a month, and we've talked about why you should set closing dates, how to set up multiple users, and we've even looked at different reports and how to customize them. So congratulations, you have officially leveled up in QuickBooks Online, achievement unlocked. The next thing that you want to do is go ahead and try to actually start trying out these techniques. I am so glad that I was able to be a part of this adventure with you. Thank you so much again, and happy QuickBooksing.